In the currency quadrant, taking a look at the March British pound, which is down for the third straight session now and testing the 200-day moving average, which happens to come in right around a 125.55 today. And given that we may have closed the New York session below that level at 125.51, it's important from a technical perspective to keep an eye on tomorrow's movement to see if we're going to extend below the 200. Now, again, the futures may end up closing a little bit above that, and that would be significant as well. It'd be very significant because the futures market is the one that I'm quoting here. But if we do get below it and stay below it, you look at the last time we did that with the 200-day moving average, that was September 14th of last year, and we stayed below the 200-day moving average for the British pound for about 45 sessions. On the high today, 126.13, up about 0.3%. The low, 125.37, down about 1/3%. And like I said, we finished the day at the New York close, I should say, 125.51. It was down just short of 0.2. UK CPI came in lower than expected, wasn't changed from the previous session. The year-over-year core inflation rate is still running at plus 5.1%. And the headline year-over-year is still running at plus 4%. These were both lower than expected, but even with the last reading of these pieces of data, and still again way higher than the Bank of England wants them to be. We also had the UK industrial production figures, which were a little bit better, so that was good. But otherwise, these CPI numbers are kind of pointing to maybe the Bank of England not going toward the rate cut cycle that many people expected was going to be their next move. And speaking of rates, you look at the differential between the US and the UK, both two-year yields, UK and US, rose rapidly yesterday, but the UK two-year fell back by about 14 basis points today and the US by about 8 basis points. So those rate differentials added to the weakness that we saw in the British pound today.